us today. For those that are new, I'm Sam Robinson and I'm the CRO at bookkeepers.com. And today we'll be doing day 2 of the CFO Project's CFO Advisor Sprint for Bookkeeper Launch members. As I said, if you're new to this will provide a crash course for bookkeepers that want to add CFO advisory services to their bookkeeping business. And just a little recap, yesterday we were joined by the CFO Project co-founder, Adam Lean, as he explained the what and why for becoming a CFO Advisor bookkeeper. And today we'll be moving into more of the how-to. Here joining is Lacey Harner, who is a CPA, a BL student herself, as well as a CFO project student, and she runs her own successful CFO advisory practice now and knows a thing or two about making this work in the real world. So I'm going to go ahead and stop talking now and let Lacey, the expert, take it from here. Lacey, thank you for joining us.
Thank you. Appreciate it. All right. Well, that gave everybody a chance to answer the poll question. So we've got a variety of answers here. So that's just helpful information. Again, I just kind of want to see where each of you are. There's no correct answer to this necessarily. Okay, before I show you the system itself, I want to address a question that's probably already in some of your heads, which is, couldn't I just do this as a fractional CFO? Why does this system actually matter? Fractional CFO work, it works. It can be high impact, high trust, well paid. And for a single client or maybe two, it can be a great fit for the right advisor. But here's what I've watched happen, both in my own practice and in hundreds of practices that we've worked with. Fractional doesn't scale. In a fractional engagement, you build a custom scope for each client. There's different deliverables, different cadence, different rhythm. And by the time you have 5 clients, you're running 5 different operating models inside of your practice. By the time you have 10 clients, you can't remember which client gets which deliverable. And by the time you'd want to be at 20 clients, you've simply hit a wall. That wall is you. Growth hits a ceiling fast. Ask me how I know. There you go. I got to use that one. I know from my own personal experience. So the alternative is what we call a CFO advisory model. Same monthly process with every client, same drivers, same rhythm. Your expertise still shows up in every conversation, so the system doesn't replace your judgment, it amplifies it. It's the structure. Structure is what makes it scalable. That's the choice in front of every accountant adding advisory. Keep building it custom every time or run the same system with every client. Both work. Only one is scalable. So once you have a system, 2 things change, and both of them are what justify the premium retainer. For you, the CFO advisor, you know exactly what to advise. Same drivers, same process, same questions every month. You don't sit down on Monday morning wondering, what in the world am I going to bring to this next client meeting? The system tells you. It tells you where the client is. It tells you where the client is heading, what's off track, and what you need to focus on. The judgment you bring is sharper because it's always pointed at the same set of levers. And then for the business owner, they know exactly what to do. They walk into the monthly meeting with no idea of what their numbers say. Then 45 minutes later, they walk out with a 1-page scoreboard they can read in 15 seconds and an action plan they helped build. There's going to be 3 specific things that they need to do over the next 30 days. They don't have to be financially literate. They don't have to be some sort of translator. They know where they stand and they know what's next. Neither side has to wonder, so what now? And that's the difference. Okay, so if a productized system is what scales, what's the actual system? And that's what we're about to walk through here. Before I walk the steps, I want to name the shape of the whole thing, because if you only remember one thing from today, this is it. A CFO advisory engagement has two cadences, annual and monthly. And almost everything that confuses people about advisory work goes away the moment you see those two cadences clearly. So once a year, you sit down with a client and set the target. You answer one question with them. What does cash flow need to be this year for the business and for the life that the owner wants to build to be on track? That's the conversation. That's the deliverable. That's the once a year work. And if you'll hang tight, we're going to actually go deeper on that here in just a few minutes. So you're going to sit down, you're going to go through what is it that the client wants in order to be successful. And then 11 months of the year, you're going to be running the same loop. So every month, there will be the same steps in the same order, and you look at where the client actually is. You look at where they're projected to land, and you compare that projection to the target that you set together. You'll name what's off track in a way that the client can understand just at a glance. And then you and the client decide together what they're going to do about it in the next 30 days. So you have the same loop every month for every client. That's it. That's the whole shape. Once a year, you set the target. 11 months of the year, you run that loop. Now, here's the thing I want you to feel before we walk the next steps. The reason this works, the reason it scales, and the reason your hours per client can stay low, the reason your clients stay as well, is that you're not improvising. You're not waking up on Monday morning wondering what to talk about in that meeting. The system tells you. The numbers tell you. So the loop runs itself, and you get to be calm and a prepared person sitting across from that stressed out business owner with a clear story and a clear next step. That system has a name, and we call it the one clear path. It has 6 steps. Step 1 is the annual conversation, and then steps 2 through 6 are the monthly loop. So let's walk through those together. Step 1 of the one clear path is what we do once a year. So you're sitting down with a client and helping them set a target for cash flow for the coming year. There's one number plus drivers that produce it. Now, this is where most accountants want to skip ahead to the math, but don't, because step 1, it's not really a numbers exercise. Step 1 is more of a conversation about the owner's life. And here's why. If you walk in and ask a small business owner, hey, small business owner, what's your cash flow target for next year? They're going to look at you with a blank stare. That is not something that they think about, not in that way. They think about maybe the boat that they want to buy, or the daughter that they need to put through college, or maybe they are thinking about the next trip that they want to take, or the second location that they want to open. Your job in step 1 is to take that. You're going to take that human, messy, the off-the-books version of what success means to the client and turn it into cash flow number that the business has to produce. So you're translating their definition of success into the math of their business. And once you've done that, the rest of the year has a North Star. The client knows why they're showing up to their own business meeting in their own business every single Monday morning. And you, as the advisor, know exactly what you're optimizing for. So that conversation, the target setting conversation, takes one focused meeting. We call it the kickoff meeting for a new client, and we run it again at the start of every year as our annual meeting. So here's where the conversation lands mechanically. Those goals the owner just walked you through, maybe it was the early retirement, the kids through college, the second location, they don't stay abstract. They translate down. Together, you take those goals and you set the cash flow target the business has to produce this year to put the owner on track. And that single target translates down to a target for each of the handful of drivers underneath it. So those are the levers that actually move cash. The number of transactions the business needs to do this year, the average transaction value, the percent of revenue going to cost of sales, how fast customers are paying you. By the time you walk out of the room, you have one number for the year and then a handful of numbers underneath it. Each one, a driver you set a target on together. Those driver targets become next month's scoreboard. So here's the thing that nobody tells you about step one. Your client, they're going to remember that conversation for years. Not because you were showing them a bunch of fancy spreadsheets, but because of how it actually felt when somebody asked them how they're doing and what their goals are for their business and what they're dreaming of. Somebody that knows their numbers, has access to them, and is asking them those questions. For a lot of small business owners, that's the first time anyone with books open has ever asked those sort of questions. So you only do step one once a year, and then the rest of the year, you're keeping the client on track to hit those targets that you set, which is where steps 2 through 6 come in. Okay, so we set the target in step 1, that's annually. Now we're in the middle of the year. The client is running their business, you are their advisor. What do you do every month? Well, you run the loop. 5 steps, same 5, same order, every client, every month. That's the shape. The whole rhythm I'm about to walk you through fits inside roughly 4 hours per client per month. It's predictable, schedulable, scalable. That's what makes the math from yesterday real. A single advisor carrying 10 of these engagements at the same time at $2,000 a month each. Before I name any individual step, I want you to feel the rhythm itself. So same 5 steps in the same order every single month with every single client. The system is what stays still, and the clients are what change. And that's how this is all scalable without it breaking you. So let's walk through this monthly loop. Step 2, we are updating actuals. This is where you as the advisor look at what actually happened in the business through the most recently closed month. So you're going to refresh the actuals for the same cash flow drivers that you set over in step 1. You're going to be refreshing those with actual numbers. So sales transactions, average transaction value, cost of sales, payroll, marketing, overhead, days sales outstanding, days payable outstanding, and the rest. Not a custom report. The same view, the same drivers every month. This is the part of the work that looks most like what you're probably doing right now. So you're going to actually pull the actuals from their accounting software and get current on what is the client's current reality. The difference is what you do with them next. Least time, most discipline. So then we go to step 3. This is the forecast. This is the step that separates a CFO advisor from a really good bookkeeper. So you take the year-to-date actuals from step 2, and you're going to project them forward to the end of the year. So you're going to be looking at where is this client actually going to land at year end if they have the same current pace. You're looking at, if nothing changes, where are they going to land? That projection is your forecast. This is not what the client hopes will happen. It's not what they want to happen. So what you, as the person sitting in front of them with the numbers, it's what you believe will happen if nothing changes. And this is actually the step that most accountants skip. And it's the one that takes the work from backward looking to making it forward looking. You stop telling the client what happened and you start telling them what's about to happen. The forecast is the most important number in the whole loop because it's what is being compared to the target. And then step 4, this is the score. So in this step, you're going to take the forecast. So where's the client heading? And you compare it to the target you set together back in step 1. And if the forecast is at or above the target, that means that driver is on track. It's going to be green. If the forecast is close, but not quite there, you're going to score it at yellow. And if the forecast is clearly going to miss, it's off track, you're going to score that at red. You do this not just for the bottom line cash flow number, but for each of the underlying drivers of the business. So the metrics that actually produce cash flow. Every driver is either on track, it's slipping, or it's off track. And here's what matters most about how this gets presented. The scoreboard isn't a working file for you. It's actually a visual built for the client. It's 1 page, 3 colors, simple. The owner should be able to look at it at a glance and know exactly where they stand in seconds. Shouldn't require you having to translate it. It's quick, it's simple, read it at a glance. And that's the bar. Because if the owner is needing you to interpret it, then the scoreboard, that tells us the scoreboard just isn't doing its job. 1 simple view, no 15-page financial packet. We're not doing that to our clients. No P&L deep dive, no spreadsheet literacy required. That clarity, that's the entire point. And then step 5 is to create the objectives. Once the scoring tells the story, then your job is to focus the client. So you're going to look at the items that were colored in red and possibly look at the ones in yellow, and you're going to pick 1, 2, or possibly 3 things that the client can focus on in the next 30 days. You want to be careful here. Do not give them a list of 5, 10, or more things. Hey client, you're all yellows. You need to improve everything. No, they need 1 to 3 objectives. It needs to be measurable, specific, and tied directly to whichever drivers are off track. This one can take some discipline. You might need discipline in step 5. You might need a little bit of restraint because sometimes you do want to give the client a bunch of different things to work on. But the thing of it is that small business owners are already overwhelmed. They're already spinning a lot of plates. The advisor's job, your job, is to narrow down that field to what actually moves the needle this month. So 3 drivers are slipping, 1 objective, and that's the work. And then step 6 is to identify the next steps. And this is the one I want you to pay closest attention to because it's also the one that most surprises advisors when they first run this system. For each objective, you and the client together on the call, you're going to come up with specific actions that will accomplish this. So this isn't you alone, and it's not you telling them what to do. You're guiding, and then they are generating. This matters for 2 reasons. 1, they know their business. They know their business way better than you do. They're going to know which suppliers they can call. They're going to know which employees they can lean on, maybe which customers they might need to press for payment. And then 2, when the client comes up with the action, then they take a different level of ownership with it. They actually follow through with it. So we want to work with them to create next steps that's not improve collections. Instead, it could be call these 3 overdue accounts by Friday. It might be move invoicing to within 48 hours of project completion. We want it to be specific. We want it to be time bound. And then we want it to be owned by the client. So you write the next steps down, you assign the owners and the dates, and that's the client's action plan for the next 30 days. So that's the monthly loop. Update actuals, forecast, score, create objectives, and identify next steps. 5 steps, same order, every month. Then repeat the next month and the next. That's the rhythm. All right. I want to be able to show you what this deliverable actually looks like. Let me get the scoreboard here. So 1 page, 3 colors. You can see this is a 15-second read. For the first time in the business owner's working life, the owner is now looking at their own business and they can understand what's working and what isn't. They don't even need a translator for it. They can just see it at a glance. They don't have to be financially literate to read this. They can glance at this and know exactly what they need to focus on. So we're going to have, I see we changed these colors. We see here more of a bluish color. The green is on track. Yellow is slipping. Red, kind of orange is coming through on this one, is off. That's the whole vocabulary. That clarity, 1 page, 3 colors, a 15-second read is the whole point. Both of you arrive at the same picture in seconds. There's no translating, there's no orienting. The scoreboard's job is to collapse the time that it takes to get the information shared and to get them to a point where they are understanding exactly what they need to focus on next. Everything else in the system is upstream work that produces this. So let me come back to the time math one more time. Now that you've seen this whole loop, it typically takes the advisor with this system in front of them anywhere between 2 to 3 hours of prep time. So this is where you're pulling the actuals, building the forecast, scoring the drivers, and then drafting the objectives. And then you hop on a call with the client or bring them in. If you have them in person, you're going to have a 1-hour meeting with them. And then you should anticipate probably about 10 minutes on the back end, just for any sort of follow-up, maybe some sort of touch point on the back end. So that's where we come up with the less than 4 hours per client per month number. The leverage is the system, not in the time you spend. Okay, we've named the loop. Steps 2 through 5 happen in your office before the client ever sees a thing. That's the prep work. And then step 6 happens with the client in the room. And the way it happens is structured. Same shape every month with every client. 1 hour, 3 parts. So let me break down these 3 parts for you. So for the first 15 minutes, your job is to listen. You're going to open with 1 question. How's the business going? And then at that point, you just shut up. Shut your mouth. You let the owner talk. You're going to take notes, but don't interrupt. For most owners, this is the most therapeutic 15 minutes in their work. Their spouse doesn't want to hear about it anymore. Their employees really can't be their audience. Their tax accountant probably is only talking to them once a year. So for them, this is special. You're the only person in their life that has the access to their books and to their information, and also has the patience to listen to them. Okay, so after their first 15 minutes or so, then for the next 5 minutes, you're going to show. So you can share your screen, pull up the scoreboard, and you're going to point at what's red and just let it land. You're just going to kind of pause for a moment and let it land. The owner can see the thing that they've been feeling And you'll recognize this. I experienced this. Ask me how I know. I was shocked. Like, they feel it. You don't have to explain it. You don't have to lecture. The picture does the work for you. And then for about 40 minutes, you're going to build. You name the objective. Then you turn the conversation over and they generate. The business owner generates. So you guide and write down. And by the end of the hour, you have a one-page action plan with specific next steps, owners, and dates. And that's the meeting. That's your hour with them. So in just a moment, I'm going to share 2 case studies with you. It's going to be from different industries and different problems, but we're going to be utilizing that same hour with the client. But first, I've got another poll question for you. So after updating actuals and creating a forecast each month, what comes next? Is it A, send the financial reports to the client, B, compare forecast to target and create a color-coded score, C, schedule a check-in if there's a problem, or D, wait for the client to ask a question? All right, we've got a smart bunch of people here today. We have 0. Oh, no. Okay, you're still a smart bunch of people, but for a moment, we had everybody on the correct answer here. All right, you're mostly coming in correct here at compare forecast to target and create the score. Okay. So pretend your client is a landscaping company and they're doing about 1.2 million in revenue. They're profitable, growing, they're well known in their market. So here's what matters about the client. Her goal for the year. Remember back, we're going to cover step 1, that annual conversation. She told you what she wanted this year to look like. She wanted to take her family on the vacation that she's been pushing off for multiple months. She wanted to get her son's first year of college funded, and she wanted to distribute an extra $30,000 to herself. She wanted this on top of what she was already getting. So those are some big goals she has. That's what success looks like for her this year. And then that's the conversation where you set the targets. Now we're 6 months in, and over the last 12 months, the owner has felt the business getting harder, but she wasn't quite able to put her finger on why. For some reason, she's working more hours, hiring more, and the bank account does not seem to reflect that. How many of you hear this scenario from your clients? I definitely do. This is very common. So that's the client sitting across from you. And now we're here for the monthly meeting. So let's pretend it's the 3rd Tuesday of the month. It's 2 p.m. Imagine yourself there, and you've spent about 2.5 hours that morning running steps 2 through 5. The actuals are pulled, the forecast is built, and the scoreboard is set. You now know what you're going to focus on before the call ever starts. Do you remember what question we open up with? We're going to open up with one question. How's the business going? And then remember what's next? We zip it. We let the owner talk. We're going to give them the next 15 or so minutes. And this owner tells us about how frustrating the quarter was. She goes on and tells us a commercial bid that she won, but she can't quite figure out why it's eating up all of her crew's hours. Oh, and then there's an employee who quit and a customer who paid late. So you're taking notes, but you're not going to interrupt. And then what you're going to do next, you're going to share your screen and you're going to pull up the color-coded view. So remember, this takes about 5 minutes and you're not going to lecture. You're simply going to point at what's red. So you're able to show her revenue is up 15% year over year. That's green, but cost of sales is up 22%. Your labor is growing faster than your revenue. And it's that's what's tightening the cash. For the first time in months, The owner can now see the thing that she's been feeling. She didn't have to look at a P&L. We didn't have to have GAAP accounting. There doesn't need to be a 15-page document. It's one page with 3 colors, and her face changes because something sticks. She gets it. And maybe for the first time ever, she's able to see at a glance and understand exactly what's going on in her business. Now you spend the last 40 minutes building the action plan together. So you name the objective. The objective is to bring the cost of sales back in line with revenue growth, and you explain why it's on the list this month. Then you turn the conversation over and figure out, what's actually different about those commercial jobs. So you want to be asking questions to kind of figure this out. Where's the extra labor going? What would you need to change in how you bid the projects? And this is where the owner starts generating. She realizes that the bidding process doesn't really account for the complexity of the different projects. If you're going from, say, a $5,000 residential job as compared to a $25,000 commercial job. And she's able to see the commercial jobs are eating margin and nobody's tracking it. As she talks, you're busy taking notes, you're busy typing, and she lands on 3 next steps. She's going to rebid the commercial rate card to reflect actual labor hours. She's going to set a threshold above which projects require a site assessment before quoting, and she's going to track labor cost per job for the next 90 days. Owners are assigned, so the owner takes the rebid, the office manager is going to take the labor tracking, the due dates are set, the action plan is written down, agreed upon, and time-stamped. And you're able to wrap up in 1 sentence. You could say, next month, we open up with the same 3 things. How's the business going? Where does the scorecard sit? And then how did we do on the plan this month? And that's it. Your hour is up. I'm going to go on ahead and start the second one, but I'm just curious, as I go through that example, are you able to envision that with any of your current clients? Can you picture maybe one of your bookkeeping clients and just imagine what it would be like to be able to quickly show them what is happening in their numbers and the value that they could possibly get from that? All right. Yes, I'm getting lots of feedback there. Fantastic. All right. Now here's the part of the story I want you to feel. 9 months later, cost of sales is back at 38%, exactly where it should be. The owner has recovered roughly $45,000 of gross profit she would have otherwise leaked out the door. And because she set the targets back in step 1, she knows what she gets to do with that money. Do you remember what she wanted to do? Because that's what we constantly want to bring it back to, is the targets. What is success for her? Well, she told us that at the beginning. She's now able to take the family vacation. She opens up her son's college fund, and she's able to take that extra $30,000 distribution. Those are the goals that she named. That's the goal that she hit. Not because someone told her, hey, client, labor costs are too high, but because the scoreboard surfaced 2 off-target drivers. And the owner built 3 concrete actions to put them back, and then the cash went somewhere that actually mattered to her and mattered in her life. If her CFO advisor helped her accomplish that, do you think she'd renew the retainer next year and keep it going? Of course she would. Absolutely. All right. I see lots of feedback coming in. Thank you for that. So I'm glad to see that you can imagine that with your clients. Okay. Here we are in this example, different month, different client. This one's a professional services firm, say a small consulting practice doing about 1.5 million in revenue. On paper, they're profitable, but in real life, they keep running out of cash. The owner has called you in a panic twice in the last 6 weeks because he couldn't make payroll on time. And here's what matters to him. He had his goals that he set in in step 1. His goal this year is to hire a second senior associate to take some of the pressure off of his team and to take 2 full weeks off in August. He wants to have to stop checking the bank balance every time he has to run payroll. So that's his goal. So we're going to have that same rhythm, that same opening question. How's the business going? We're going to give the client time to speak. We're going to listen. And then we're going to pull up the scoreboard. Margins are green, revenue is green, but days sales outstanding is bright red. We can see he's collecting at 65 days against a 30-day term, and that's the cash gap. And that's why payroll keeps getting tight, even though the P&L looks fine. So we give it a few minutes. The owner is able to see, no accounting jargon, and then you're able to jump in to the next 40 minutes, which is creating an action plan. So with the action plan, the goal is that we're going to bring it down from 65 to 30. And we're going to ask questions so that he can figure out what his next steps are going to be. Remember, he is going to generate the next steps, and he comes up with, maybe 2 to 3. So we have here in this call, 1, we're going to call 2 largest overdue accounts personally this week. He's going to do that and agree on a payment schedule. 2, lighten the invoice cadence. So every invoice goes out within 48 hours. And 3, add net 30 terms with a clear late payment policy. You're taking notes. He is assigning the owners of each of those. And now here's the part in this example that I want you to feel. The first monthly meeting after that plan, days sales outstanding is at 52 days. And then by the second monthly meeting, it's at 44. And by the third, 90 days after the first action plan, the business is collecting at 38 days. And by month 4, he stopped checking the bank balance before payroll runs. That's the life he was creating. So we were helping him know his next steps so that he could achieve those targets that we set in step 1. That's the deliverable, and that's what's worth a retainer. So we've gone over 2 different clients in 2 different industries with 2 different problems, but each of them had the same rhythm. We listen, show, and build. And then we have all the systems underneath that help us have that same loop every month. That's CFO Advisory, and that's the one clear path. All right, I'm actually going to skip past this slide just for the sake of time. I think I'm going to keep moving along here. So I want to address head on the question that's probably sitting in some of your minds right now, which is, will a small business owner actually pay me $2,000 a month for this? And the short answer is yes, they will. And thousands of them are already doing that with advisors who are running this exact same system. So instead of asking yourself, will they pay? I want to spend a few minutes on why. There's really 3 reasons a small business owner is willing to pay a premium retainer for what we just walked through. And they're all reasons that have nothing to do with the financial reports themselves. So 1, it's the only place in their working life where a financially literate person is actively, monthly telling them the truth about their business. Their bookkeeper records, their tax accountant complies, but you are actually able to tell them what they need to do with that information. 2, the deliverable is action. It's not information. Most of what small business owners pay for is the financial space. In the financial space is information. They don't even know what to do with the information. So they might get their financials, they might get the tax return, but the business owner is still wondering, what do I do with all this information? What should my next step be? And then 3, The relationship is structural. It's not transactional. So we know, I've already shared my own story, tax work once a year. Bookkeeping is invisible, kind of when it's good, it's invisible. And it's only really a problem when it's not working. The monthly meeting is in the calendar every month with the same person in the same seat, and it becomes part of how the business is run. So by month 4 or 5, the owner can't picture trying to run their business without it. And that's why our target for client retention month over month in a CFO advisory practice is 95%. An advisor with 10 clients keeps almost all of them every month, more or less indefinitely. And that retention number, by the way, is why the math from yesterday works. 10 clients to $250,000 in revenue only adds up if the 10 stay. With the system, they stay. And that's why the practice we'll walk through tomorrow with Diana looks the way it does. So 3 things to carry out of today: 1 annual target, 11 monthly loops. The shape of the CFO advisory is 2 cadences. Step 1 is the conversation about the owner's life once a year, and then steps 2 through 6 are the loop every month. Then the monthly meeting has 3 parts: listen, show, build. You're going to have 15 minutes of listening, 5 of showing, 40 of building. And you're not selling reports, you are selling action and presence. Okay, so one assignment before tomorrow, I want you to take 10 minutes with the day 2 reflection PDF that should be coming to you in your inbox. And there's 3 prompts. The client you named yesterday is going to come up again. And this time at the level of what would your first monthly meeting actually look like? And I want you to bring that to day 3 tomorrow with Diana. And I am actually curious on this one, so I would love to launch this poll question here. What part of today's system felt most like the missing piece for your practice? Is it A, a repeatable monthly rhythm, B, showing clients the data simply, D, turning data into focused action, or D, the reason clients keep paying? So you'll have a moment to answer that one. So here's where we landed today. We named the shape, 1 annual target, 11 monthly loops. We walked through the 6 steps of the 1 clear path. We were able to sit inside the monthly meeting from the client's chair. So we have listening, scoreboard, 40 minutes of building, and we named why a small business owner pays a premium retainer every month for years for that hour. That's the product. That's what you'd be selling. And tomorrow, Diana is going to take the camera off the client and put it on you, your firm, your calendar, the economics of running this on the ground. She's going to talk about how you find your first CFO advisory client or your next one. She'll talk about what your week and your month actually look like when you're doing this, and the honest version of what it would take to install this into your practice. If today was what your clients pay for, tomorrow is what your practice looks like when you sell it. Same numbers from yesterday, new seat. The 10 client picture from day 1 gets fully unpacked tomorrow. So be on the lookout for that PDF. I can see I have used up most of our time here. I do want to have some Q&A. But thank you, everybody, for spending the last hour with me. Tomorrow is going to close it. Diana's going to close this out tomorrow. If what you heard from me today resonated, you were able to go to the CFOproject.com/call. You can also use this QR code. Just snap it from your phone. One last thing before we go into Q&A is I just heard yesterday that the CFO project is actually going to be opening up a special cohort just for bookkeeper launch members, which is amazing. Pumped for you guys on that one. And then I also heard that we have negotiated a discounted rate with Bookkeeper Launch.
Yep.
But just so you know, I run some of these cohorts and they do fill up fast. And I believe the discount is only good through the end of this week. So grab that QR code. And I am just super excited to see you guys in the hub with me.
Excellent. Well, thank you so much. This has been very, very helpful. So I just had a couple of questions from the crowd, Lacey. Early on, a gentleman named Tim asked, when you were going through steps 2 through 6 on step 3, forecasting, he asked, would someone use a rolling 12-month if the business has seasonal variations? Not sure, there might be some more context to that that's needed, but off the top of your head, you know?
I'm going to try to interpret what he means by the question. So I apologize if I'm misunderstanding. I do account for seasonality, but again, it's more about where would they land if nothing changed. So you do have to start by looking back at historical data, but then you're going to build it out and forecast it out. So if we know that somebody has that seasonality, I'm not just going to have it coast as if they don't. I'm going to factor that in.
Yep. Excellent. And I'll go ahead and answer this one for Joanna. She asked if, or she said she missed yesterday's meeting. You will be emailed yesterday's meeting, the video, and I'm going to post it to YouTube. But she also asked, if she doesn't have a lot of experience in different business types, does the CFO project cohort help with that? You know, if you're, staying in your lane with one type of business, I'm guessing is what she means. I'm guessing that the principles here apply.
Your niche.
Yeah.
The good thing is this is applicable to any business, any industry. So it's our job to understand the numbers. It's the client's job to understand their business. So it's fine if you want to have a niche. We have lots of members who do, but absolutely you do not. You can apply this to any industry.
Excellent. And then another question, I think this is from the same guys earlier, and I actually had the same thought in mind, but when you were going through the 3 different colors, blue, yellow, red, as a way of conveying information to your clients, how did you decide what qualified as red or yellow? Like, for example, on the over target, was yellow 5% over target, red 10%, what was sort of the ethos behind that?
Yeah. I like to tell the members that I'm working with, it's part science, part art, but we're ultimately looking for what would produce the greatest ROI. If they focused on that next, it's going to have the greatest ROI. So it might be that they actually should have everything in red, but remember, we don't do that. But you're able to kind of filter out what is going to have the biggest ROI. Put that one as red, and then maybe the others can end up being yellow because you're going to work on them. It's just not our first focus.
Yeah. I like that though. It's a little bit of a science, but you as the bookkeeper do need to have some room for your own business and what you judge to be best when making that assessment. I have a good question here. Are the key drivers the same as the scoreboard targets, or is it something different?
Those end up being the same. Sorry, I had to actually picture in my mind. So we have the set drivers that drive every business, and then that's what's over on the scoreboard.
Yep. Excellent. And then how much experience, just from what you've seen, from what you personally, but how much experience as a bookkeeper / tax preparer do you recommend someone having before, transitioning into the CFO advisor role?
Well, knowing where you're coming from, that you're coming from Bookkeeper Launch, you guys are well educated. You have a very solid foundation. So if you have gone through that program, you are absolutely set up and primed to now add CFO Advisory.
Excellent. Awesome. Well, let's see here if I missed out any questions. Here we go. Diane asked, Ben always encouraged getting to pain points in being someone's 21st century bookkeeper, having monthly meetings with reporting and advisory. Is there anything that's a little bit different about being a CFO versus someone who may already do this with their clients? I'm guessing the CFO has more hard data like you showed and sort of an action plan, if I'm guessing correctly.
I think I hear what you're asking. And for me, the answer was 100% there is something different, because I understand the financials. I could explain it to the clients, but there seemed to be a disconnect. And so having the framework and the templates to know how to talk to a client in a way that they can receive it and know what to do next. If they're not aware of what to do next, then the data can only take them so far. It's good data. I'm not saying any bookkeeper is, not doing their job and doing a great job of it, but the client has to be able to know what to do with that next. So that's one component, is it presented in a way that they can easily understand. And then the other one would be what effort goes into you getting there. So I was working the system trying to figure out how, I want to offer advisory services, but I just dumped a lot of time into it and never actually felt confident that I was delivering what I wanted my clients to receive. So for me, it made a huge impact that somebody could just tell me, do this and you're going to bring value to your client.
Yeah, absolutely. Well, again, Lacey, thank you so much for that awesome presentation. It really opens up some things for me, and I'm sure for the rest of the audience. Guys, tomorrow we'll be back at it at noon Eastern time with Diana Salcido as she talks about how to offer this to your clients. But again, Lacey, thanks so much. And I know that he's in the background, but thank you, Dave, for doing the work on the back end. Everyone, it's been a pleasure. This presentation will be emailed to you, and we hope to see you again tomorrow.
Thanks, everybody. Good to be here with you today.